Welcome to this video on next week's meeting of the US Central Bank. Investors are discussing when the Fed will start tapering its bond purchases. But at its meeting next week, the Fed is unlikely to take a decision. Instead, Fed Chairman Powell will talk about conditions that must be met for the purchases to be reduced. The central bank has already said that it will not reduce its purchases until it sees substantial progress in achieving its goals. It is primarily concerned with the labor market. It is not just aiming for full employment with a view to the average American, rather it wants employment to be high in all population groups. This criterion in itself argues for tapering to start only next year. But inflation has risen significantly recently. Wages have also picked up. Inflation risks have increased significantly in the United States. That's why the Fed is likely to start reducing its bond purchases already in the fourth quarter of this year. Also, not all labor market problems will have been solved by then. If the Fed begins to wind down its bond purchases in the fourth quarter, this process will extend into late summer 2022. I expect the first rate hike only in autumn of 2023. After all, US sovereign debt relative to GDP is as high as after the Second World War. Politicians will put pressure on the Federal Reserve to help it with zero interest rates for as long as possible. Regarding markets, investors will for the time being focus on the obvious. That means the scaling back of bond purchases. That, together with inflation concerns, should tend to push up US government bond yields until autumn.